What's up, everyone? It's Caddy with Money Investing, and what a day in the markets. And pretty much all three indices selling off, yields coming lower, and volatility spiking on SVB. So Silicon Valley Bank here, commercial bank, obviously taking on the entire banking sector with it. So we're going to talk a lot about that. And in my opinion, it is only giving you a glimpse. This is only giving us a small glimpse of what higher interest rates can do to certain parts of the economy and certain sectors and certain companies. Only a glimpse. This is like literally the beginning parts of what higher interest rates can do to certain companies and, of course, eventually the economy. So I hope you guys enjoyed this video. I really encourage and want each and every one of you guys, literally no doubt, no kidding, I want every one of you to go watch this video that I posted 18 hours ago, talking about how this time is different and 4 scary charts. It's only a matter of time. We've talked about this on the channel before, but I was quoted as being too bearish. But really, please pay attention to these 4 macro charts that every time certain things have played out, there has been nothing, there's been no hiding from the market. There has been recessions in the years to follow. Please check that out if you have the time. And again, of course, watch this video first and then you can jump over to that one. But, we pretty much go over how this time, in my opinion, sarcastically, is not different, obviously, because of the information, of the data that we're seeing in the markets. So this is SVB Financial Group, and dropping over 60% on the day. They were down another 22% after hours. So overall, they were down 74% from their highs of $340 coming down to low 74. So pretty substantial drop, and the reason for this drop is very simple. Silicon Valley Bank is a bank, commercial bank, that was focused very much on giving out sort of pretty much the bank of these startups and tech companies, right? So very much when you're first starting out as a business, obviously you're not going to be as profitable. In fact, you're going to have massive losses. So they were pretty much financing a lot of these startups and tech companies, and what they did with the deposits was basically buy bonds. To have more profitability. But this was during the pandemic. This was 2 years ago. As a lot of the volume activity has dropped off, as there's not been a lot of IPOs, not been a lot of startups, and yields have gone up, these tech companies' valuations, number one, has fallen off the cliff. Like literally they've come down so much. As we already know, 2022 was a brutal year. Valuations came down 70, 80, 90%, in some cases, a lot, considering which sector you belong to and, how much on speculation were you trading with to begin with. Now, that's number one. Number two, what happened was when the yields started to rise, yields started to push right back up, we basically saw the cost of borrowing increase, right? So instead of financing, of course, a lot of these tech companies will dive into their bank accounts, into their savings accounts, and will start to take out their deposits. And as you see a lot of outflow happen at the same time, SVB obviously doesn't have all the money available at the same time. So what they do is whatever bonds they purchased during the pandemic, they're going to have to sell those to redeem and to kind of have that liquidity back. But with bonds, as we already know, they're like a debt product, right? They're a debt instrument. So if you basically redeem them before maturity, you're going to have to lose all your gains, right? So pretty much if you are selling at a loss, then you're going to realize that loss. So only way you don't actually realize a loss if you hold it till maturity, so you get your coupon payments and you're making your principal payments as well. You're going to get your principal payments at the end of maturity. But if you do sell before the bond matures, you're going to be taking on the loss as a more permanent loss on the balance sheet. And as a result, that's what happened, and that's what happened in a larger scale. And you're seeing this bank pretty much sell off quite aggressively and take down all the banks with it. So Bank of America down 6%, Wells Fargo down 6%, SoFi, JP Morgan, Square. We had Credit Suisse, Citigroup, Morgan Stanley, Barclays, BlackRock, Deutsche Bank. I mean, every single one of these over here, this is our bank's watch list, is down at least 2%, if not 4, 5, or 6, almost 7%. So pretty brutal day for the banks here. And of course, that transpired over to other sectors, other stocks, and other equities as well. It didn't help that we get the jobless claims numbers coming in much stronger than what the expectations were. So 211,000 jobs in other words, unemployment initial claims filed last week versus the consensus of 195,000. So we came in a little bit hotter than what the expectations were for initial claims. And in my opinion, this is going to translate over to a much softer jobs report as well, which we are going to get tomorrow at 8:30 a.m. Eastern. I will most likely be live to cover that report because it's going to be very important for employment. And we're going to get that unemployment rate, we're going to get the participation rate, and all those other things. So S&P 500 closes 1.8% lower as bank stocks succumb to the pressure, and Dow sheds more than 500 points. So SVB Financial cratered 60% after announcing $1.75 billion stock sale, pushing its market cap to a little over $6 billion and dragging down other regional bank names. Silvergate, on the other hand, the crypto lender, is also shutting down operations, down 42% on that news. And crypto also had one of the worst days in a long time. Bitcoin and Ethereum down 6-7% each. We'll talk about that as well. But this is just the beginning. Literally, this is only a small glimpse of what higher interest rates can do to the economy. This is just like one of the first falling pieces and showing some cracks in the economy with higher interest rates. We haven't even begun, in my opinion, with what higher interest rates can do. And that's exactly one of the reasons why I'm cautioning everyone to be careful, be safe, be mindful of the risk that you're taking on, because there's plenty of other opportunities that are risk-free or less risky, so to speak, in the markets right now. I mean, the 6-month T-bill paying you 5.2%, right? 2-year treasuries paying you over 6%, over 5%. So those are some pretty good returns for a good lock-in period, considering that you're not taking on any risk. There is and most certainly going to be, in my opinion, a flight to quality eventually once investors start to realize what they're missing out on from a risk-free perspective. And this right here was another indicator that we talked about not too long ago, basically going over the 21-day weighted equity put call ratio moving average. And what you'll notice is that every time it's come down to a sell signal back in April, back in August, back in towards the end of December a little bit, it has been a sell signal, right? It has been a signal where we are not positioned long on stocks because stocks have been a little bit on the more expensive side. And even from a technical standpoint, we've been a little bit on the overbought side. And once again, we're seeing that in March where this was a sell signal starting to reverse back higher. And of course, S&P and NASDAQ are rolling over. Another thing that I think is very, very important for us to realize, by the way, this was the heat map, pretty brutal, right? Tesla down 5%. My covered calls are now up 94%. Amazon down 1.78%. We got Nvidia finally rolling over, down 3%. AMD, Broadcom, Microsoft, Apple, all the banks here, healthcare stocks, real estate, industrials, basic materials, energy. I mean, you name it. Every single sector was down with a few greens here and there. But I do strongly think that investors, analysts, and everybody, I feel like we're still very much in denial. We're in denial to the fact that inflation is still high. We're in denial to the fact that the Federal Reserve is still going to be raising rates. We're in denial to the fact that the economy is not that great from a recession standpoint. So I think the investors are very much in denial, thinking that everything is good because the stocks rallied in January. And so far, 2023, year to date, stocks are higher. I do believe that there is some level of denial in the markets because of what we're seeing, not what we're actually understanding about the market or the economy. And the fact of the matter is, inflation still pretty unresolved at over 6%. Interest rates at over 4.5%, closer to 5%. We're going to get another 50 basis points most likely in March, depending on how inflation comes out next week. And still 100 basis points kind of priced in over the next few meetings, and eventually economy is going to start to give in, right? There's going to be a breaking point in the economy, in my opinion, which I think everyone needs to be aware of, how bad it can really get when interest rates get up to 5, 6, 6.5, maybe even 7%, especially when you talk about the 10-year yields, right? 10-year yields, everything's kind of pegged against the 10-year yield. If that keeps pushing higher, 5.5, 6%, it's going to be a real problem for the economy. Now, there's not just a problem on the upside, there's also a problem on the downside, which we'll talk about amid some adjustments in my 2023 prediction. But this, again, is the entire market. You're seeing just brutal sell-off in the last one day. All 11 sectors in the S&P 500 down. All 11 sectors, except for utility technologies, kind of doing okay on the last week, are down. And over the last 1 month, every single sector in the S&P 500 is down. All 11 of them. Orange juice for the win, so pushing higher 2.7%, but everything else straight up down here. So we got coffee prices, we got oats, canola, natural gas, and Bitcoin just struggling here, down to 20,000, 7.6% sell off, and Ethereum also down to 1,400, another 7% sell off here. So again, I talked about, the video that pretty much goes over the 4 charts. Definitely watch this video. But I did another video talking about my 2023 predictions and my estimations and approximations and what I believe is going to take place in 2023. My number one estimate was that inflation turns into stagflation and stays above 4%. Now that there's been some new data talking about money supply contracting, and we have kind of talked about this on the videos as well, money supply is pretty much contracted about 1.7% year over year. Now, if money supply contracts further, then I believe inflation could turn into deflation, and which is negative inflation, right? Meaning negative prices, -4, -5, -10%, and that continues for some time. So there is going to be risk both on the upside and on the downside. Doesn't necessarily mean that just because inflation's at 4%, that's a risk. If inflation's at -4%, that's also a big problem for the economy, because that's going to lead to a lot of contraction. Now, unemployment rises above 4%, that stays the same. Earnings recession happens after first quarter 23, that remains the same. I have no doubt in believing that it's going to happen, in my personal opinion. Economic growth contracts in 2023. Fed funds rate sits above 5% by end of year, and that again is if we don't see deflation in the economy. Considering the money supply contracts, but doesn't contract to a steep level that it actually causes deflation in the economy, even though there has been some, again, going over to those charts, make sure you watch that video. We looked at those charts, and every time money supply did contract, we did see deflation. But if money supply comes down, like say it's 0% or close to 0%, inflation was still steadily higher from those levels. So it's a little bit of a gray area still. It's not like that cut and dry. But those are some of my expectations in economic recession by the end of this year. Is personally speaking, in my opinion, is almost a certainty at this point. So brutal day. What a bloodbath in the markets here. We got the NASDAQ down 2%, got the Dow dropping over 500 points, S&P down 1.85, and yields. Surprisingly, the yields are rolling over. I've got a trade idea on TMF for this very reason, and they're pushing higher. They were up over 63 basis points. After hours, they were up another 1.38%. I'm actually going to be planning to buy more of TMF and TLT as yields continue to roll over. And if they do, that's going to be a good potential trade idea on the upside for TMF. And again, if you want to get access to all these trade ideas, trade alerts, get access to all of the private videos and tutorials, the link to our Discord and Patreon is going to be down below. There is a 16% annual discount still available for a limited time. So you can check that out if you want to be a part of our money investing community. We'd love to have you on board. We've got a little bit over 3,600 members, part of our Discord. So talking about volatility first, a huge spike. VIX jumping to over 22. We got an 18% move on the volatility. And the next level we're really paying attention to is going to be 24. So pretty wild move for the VIX in one day. So definitely pay attention to that. And of course, we're watching 25, 26 for the VIX, all the way up to as much as 35 that eventually, VIX could get up to if things continue to worsen over time. But those are levels never not seen since October of 2022. The VIX has been very, very subdued, very consolidated sideways. It's been trading pretty much in that range, but hasn't broken past 25, 26 levels. Crude oil prices, once again, rotating back down. I mean, this is like literally like textbook now. It's just been trading sideways in that range. Every time we get down to $70 per barrel, we see buyers step in. It rallies a little bit over 9%. Every time it gets down to low 80s, it starts to sell right back down. And right now it's down 6% and trading just over $75 per barrel. Crypto, I don't even want to go over this. Bitcoin here selling off so aggressively down to $20,000 right now. And from its recent highs of 25K, it's dropped about 20%. Same thing with Ethereum, a brutal sell-off and still trading inside the this descending triangle. So still getting rejected here at these lower highs. And really the next support is going to be down to $1,000 if this sell-off continues, if we continue to see a breakdown below those moving averages for Ethereum. So fortunately, those are going to be some levels to pay attention to for Ethereum. Now, talking about the markets, S&P 500, and what do we got? We got a pretty brutal sell-off here for the SPX. Next support is going to stay put at 37.74, 37.75. So this right here is going to be that level to watch for S&P 500. Wouldn't be surprised if we get down to that level. And again, we're going to keep a close eye on the valuations at 39.18. Let's see, divided by 222, we're trading at 17.6. That's much better than the 19 and 18 and a half that we were trading at. So we're coming down to 17.6. We'll continue to pay attention to the valuations and, of course, the technicals as well. But the markets definitely are in a very tricky spot considering what we have going on in the economy with interest rates, inflation, and not to mention now with the banks and SVB Bank, financial institution, and Silvergate as well. So there's just like more contagion happening towards a risk-off environment for the market. Talking about the NASDAQ here, so NASDAQ here selling off as well, of course, and down quite a bit. And the next support really is going to be maybe this lower high. So right now, you'll notice that lower high is kind of consistently validating this level since the beginning of the sell-off in January 22. So all resistance potentially could act as a support here. It did back in beginning of March. So we kind of validated this level and the NASDAQ pushed up 5%. And right now we're coming down back to that level. So we'll see if that level continues to validate at 11,200 or if we break down below this level. And if we do, the next support really is going to be down to the October lows at low 10,000s for the NASDAQ. Talking about Apple, I did a video on Apple, so make sure that you do check that out if you haven't already. But Apple here, in my opinion, definitely does trade at a pretty expensive valuation considering the growth and the long manipulation that we've seen from Apple of share buybacks. It's good, shareholder value is being created, but it also gives you the wrong impression that Apple's actually growing earnings, when in fact the net income is growing, but nowhere near close to the same rate as their earnings per share because of the fact that Apple has bought back 36% of their float in the last 10 to 12 years. So that being said, I'm a lot better with Apple at closer to 120s, not at these prices, and it's definitely getting up to that lower high and that resistance sitting roughly at around 158. So we're gonna patiently wait and see if Apple comes down. This right here is gonna be that higher low and that support at close to 135, all the way down to 122, kind of in line with this previous horizontal resistance for Apple as well. Talking about Amazon on the day down 1.78%, so not a surprise, still trading inside this downtrending channel, so lower highs and lower lows being made for Amazon. And we're consistently getting rejected here at these lower highs and lower lows, and support level is going to stay put at close to $80 for Amazon moving forward. Talking about Tesla, and Tesla here, we talked about it yesterday. I mentioned my plan with Tesla moving forward, and right now what we're seeing is Tesla down 5%. After hours, the stock was down another 1.7%, so more selling pressure coming in, trading down to as low as 169.90. We've got a gap to fill for Tesla here in the 150s, so those right there are going to be some levels to watch. And in my yesterday's video, I also went over my fair value and Professor Demodron's fair value on Tesla, which are both sitting roughly at close to about $130 per share. So I think that's going to be a much better level, much better pricing for us to watch for Tesla, where I would be a lot more comfortable in dollar cost averaging a little bit. And again, support level, we're starting to break down below 175 a little bit. So this will go ahead and turn this level back into a resistance. And next support really is going to be that gap that we need to watch. And covered calls finally will be closed tomorrow. I will be up close to 94, 95% on those. And those calls are pretty much worthless. So I will be buying them back next to nothing. Next up, we got PayPal. And PayPal was very green. PayPal was, in fact, one of the best performing stocks here on the day up until this disaster happened with SVB Financial Group, and it took down all the banks with it, of course, and PayPal still managed to close green. 12 basis points. It was obviously much higher, almost trading as much as $80, and then lots of sellers stepping in to bring us down 4%, 4 or 5% intraday. So lots of selling pressure here, and we still have a gap to fill on the downside here. That's going to be that support, and we've got this lower high to also pay attention to for PayPal moving forward. So next up, we're going to talk about Square, and Square here on the day also down over 5.3%. Not a surprise considering that it is more of the speculation slash fintech stocks and definitely trades at a higher multiples. So, it's obviously getting hurt with the entire bank phenomenon and also getting hurt with the higher interest rates and lower valuations for a growth stock phenomenon as well. So getting rejected at $83, $84. It's a big resistance that we've already talked about for Square, and now starting to roll over. Support level is going to stay put at 58, close to $59 per share for Square moving forward. Talking about NVIDIA finally, for once, starting to kind of cave a little bit. We once again have that negative divergence play through. Resistance, we talked about how it's going to be sitting at this higher high. And NVIDIA right now is kind of skirting through that higher high at the moment. It's just kind of like bruising or kind of like skimming through that higher high at the moment every single day. Every single high is pretty much at that resistance. So it's like a ticking time bomb in my personal opinion. I mean, eventually people are going to start to realize the fact that valuation's a little too high, technicals are not that great, and in my opinion, there is going to be more potential downside for Nvidia, but it's so stubborn that you can't seem to time it. So we do have some gaps to fill. So there is going to be a gap here that Nvidia may need to fill here eventually. And of course, right now we're working with a negative divergence for the stock as well. So if it does have a brutal sell-off, I mean, I'm looking at 190s, 170s is a possibility for Nvidia, excuse me, moving forward. As people again realize the valuation is a little too high. Advanced Micro Devices here still in the context of an uptrend, so still making higher highs and higher lows, but selling off here down about 1.5%. This right here is still going to be that resistance at the higher high, and higher low is still going to stay put at over these levels. We're still very much in this uptrend at the moment. Talking about Meta platforms, and Meta here on the day was down 1.77%, once again getting rejected very nicely at 188. So high for the day 188.93, our resistance sitting at 188.87. So pretty strong resistance there for Meta, and selling right back down. And we've got a support sitting roughly at around 168, kind of like at the higher level of this gap, all the way down to as low as 153 for Meta platforms. So those right there are going to be some levels to pay attention to and watch. And right now what we're seeing is a lot of consolidation for Meta at the moment. Talking about Netflix, and Netflix here selling off, breaking down from this ascending higher low here. So this was a very good higher highs and higher lows, and this for the first time, Netflix is kind of breaking down from this overall pattern. And the next support really to watch for Netflix is going to be around here at 275, 276. So that right there is going to be that level to watch. And of course, right now we're seeing a little bit of a breakdown below this uptrending channel and the higher low for Netflix. Next up, we're going to talk about Google, and Google here on the day down another 2%, so selling right back down. We're seeing a little bit of reversal back here for Google. Support level is going to stay put at 89, close to $90 for Google, and of course, resistance is going to stay put at that lower high for the company as well. So we're seeing a lot of momentum to the downside, not really able to see a lot of euphoria or sentiment, not really driving it, and Google's very much close to its 52-week low, compared to any other stock out there. I mean, a lot of stocks have moved up from October, and Google also did, but it really just came right back down because of ChatGPT and of course everything that's going on with AI. So support level is going to stay but roughly in the low 80s, and I think that's going to be a very strong support from a technical standpoint and really good value for Google as well. Next up, we're going to talk about Microsoft and then Shopify. Microsoft here is slightly lower, 0.5%. So Microsoft and PayPal are kind of like the outperformers on the day. Microsoft going down, but not as much, but lots of consolidation sideways. Of course, my fair value, it's been upped a little bit to 218, to 20 around those levels. Huge technical support here for Microsoft, and resistance is going to stay put at 292 for this company. And last but not least, we got Shopify, and Shopify here down 1.6%. So coming down to this potential higher low. So we'll keep in mind this right here as a level to see whether it validates or if it gets rejected and starts to break down even further. The bottom line is, in my opinion, this is just the beginning. We're seeing a lot of cracks kind of happen, a lot of fallouts for a lot of banks, and of course a lot of things taking place because of the higher interest rates. So be careful, be cautious, and there's a lot of uncertainty still in the markets with respect to inflation, interest rates, and what's going to actually take place with the economy and consumer spending. So hope you guys enjoy this video, found it helpful. Definitely a bloodbath here in the markets on the day. So let me know your thoughts down in the comment section below. Make sure that you subscribe, drop a like, and the link to our Discord and Patreon is going to be down below if you're interested in joining us. So always happy investing, and I'll see you all in the next video.